रग रग में बहती रही बुलंदियों को छूने की जिद है, चुनूं जहां को मैंने बहकर से हम पे है अपना है, हम अपने चिकिन के है हमारा, और हम है चिकिन से है, हमसे है चिकिन in the numb in the Excel होगा से हमसे है अपना है, हम अपने हमारा, और हम है How are you selling? Bele, bele! से है हमसे है in the numb in
Hi everyone, sir. Hi ma'am.
Good afternoon.
Good afternoon, sir.
Mr. Rena, can you hear us?
He's on mute.
All right, all right. Yeah, unmute.
Mr. Rana, we can hear you a little bit.
I'm sorry,
We can hear you.
but you are not able to see my handsome face.
No, not yet.
Mr. Chairman, we got the quorum. So
Okay, it is.
left.
It is.
1 minute is left. So
Yeah.
just wait for 1 minute.
We'll wait for one more.
3 o'clock will start. You wish to start, please.
Okay, it's 3 o'clock. I think we can start the proceedings for the 34th AGM. With that, I would welcome everybody to the 34th Annual General Meeting. My warm welcome to everybody. Ladies and gentlemen, the quorum being present, I declare the meeting open now. The meeting is being held through video conference as permitted by the Ministry of Corporate Affairs. It may please be noted that this meeting is being recorded for the compliance purposes. I am Sanjay Kol, Chairman and Managing Director, participating at this meeting from my Bangalore office. I request member of board to identify themselves as I call them out. Avishant Keshav.
Good afternoon, everyone. Good afternoon, Chairman. I'm Avishant Keshav, CFO and whole-time director. Hope all of you are safe. I'm attending this meeting from Bangalore.
Madam Mrs. NS Rama, please. You're on mute, ma'am.
I'm Rama. I'm on the board of directors of Timken, and I'm also attending the call from my residence in Bangalore. I'm on the nomination and remuneration committee chairman and stakeholder committee chairman too. I'm alone in this room.
Thank you, ma'am. Mr. Bhushan Raina, please. You're on mute. If you could unmute yourself. You're still on mute, please.
On the board of Timken, and I am in my house at Jamshedpur. And I want to say that there is nobody here other than I in this room.
Thank you, Mr. Raina. Thank you very much. It may please be noted that today Doug Smith, who is in US because of this India-US time zone conflict, has got a leave of absence, so he's not able to attend.
Chairman, sir, there is an update. Mr. Das Gupta has a technical issue, but he will be joining us soon.
Okay, so we'll wait for his joining, and till the time, I may also like to say that Mr. Mandar, who is our company secretary and chief of compliance, whom you can see on the screen, is available and present in the meeting. Mr. Satya Kaushik, who is from Deloitte, representative of the statutory auditors, is also available and has joined the meeting. Mr. Nagarjun, who is our secretarial auditor, are also attending this meeting from Bangalore, and Mr. V. Sridharan, who will scrutinize and appointed by the company for remote e-voting. E-voting is also attending this meeting from Bangalore. Members will note that in terms of relevant provisions of the law, the company has arranged for remote e-voting facility for all the resolutions to be considered at this AGM. From 20th August 21 to 22 August 2021, both days are inclusive in this case. The shareholder attending this meeting who could not participate in the remote e-voting and wishing to cast their e-voting in respect of each of the results may vote through e-voting option available at NSDL e-voting portal. This e-voting will be available from now till 15 minutes from the closure of this meeting. So anybody who has not voted and is willing to vote, please go ahead and vote. Detailed instruction regarding e-voting and other relevant matters are given in the AGM notice. And the relevant statutory registers are available for inspection. For this purpose, you may contact Mr. Mandar, who is our company secretary. I would quickly give a little bit of the idea on the Indian economy. We have seen, unfortunately, many lives were lost last year, and we were passing through really volatile times. And what was VOCA, we could understand only last year. But then the silver lining is the International Monetary Fund is now projecting a healthy growth for us next year. The worst might be over with all the vaccinations being available, both indigenous and also imported in India, and large vaccinations being done with the help of the state government, central government, agencies, corporates, and that is giving us a very positive sense that we might walk into the next year, calendar year, with a lot of confidence. The worst of last year being over and behind us. However, the world output shrunk in 2020 compared to 21, but is slated to be better next year. India, which was 7% down compared in 2020 compared to 21, is also looking at a healthy 22. So 22 is projected to be strong. 20 is gone. We all know that we faced many issues, including a couple of months where we could not operate. None of us could operate any of our plant and businesses. And then slowly the production started coming up, which is very much available in the economic indicators. The GDP went minus, say, in July 2020, and now it is slowly climbing back. Manufacturing PMI, as we all know, went up, and then in 2020 went down, and is slowly coming up. India still being a net importer of the crude. We are seeing a USD versus INR a jump which ranges between 70 to 75, 76. Inflation is up, as we all know. Sensex all-time high, which is a good indicator for the confidence. Ease of doing business is getting better in India. Every passing month and every passing year, the ease of better. Manufacturing production is slowly climbing up, which is very important. Steel production, as we all know, in last 6, 7, 8 months, steel is being produced flat out. Companies which produce their own oxygen did not suffer that much. I also welcome Mr. Das Gupta, who I just see on the screen. Welcome, Mr. Das Gupta. Thanks for joining. Mr. Das Gupta is, as you know, as our independent director. So the steel production is flat out. Steel has really been, output has been very high. Car production went down and now is climbing back. The mining is also, it was down the whole of last year. It is climbing up. Cement production still, capacity utilization is still low, which is expected to go a little bit better as the infrastructure push remains on the high list of activities of Government of India. FY 2020-21 was an exceptional year, and operation of the company were impacted during first quarter due to lockdown. Post-lockdown, the company resumed operations and delivered good performance, I would say, through the effective execution despite global pandemic. Many areas were down. Total revenue, however, remained down 13% compared to the previous year. We were almost shut down for some months, some weeks. Domestic sales were down by 12% compared to the previous year. Export sales down by 14% compared to the previous year. PBT decreased by 36% compared to the previous year. We are proposed final equity dividend of rupees 1.50, 1 rupee 50 paisa per equity share of 10, which is fully paid. The company continues to focus on people, health, safety, corporate social responsibility, and also the planet, people, profit, planet, all in one plate, meeting the customer demand through effective supply chain channels, caring for communities, and protecting the business model. So as we see that the domestic sales, which ended March 2021, there was domestic, as I just said, they were down by 12% for domestic, export down by 14%, and overall we had a PAT of 143, which was considerably down to the previous year. On the sources of funds, share capital reserves, pretty much healthy, loan funds pretty much under control. We are debt free, fixed asset net block pretty much okay, and otherwise investments are pretty much in line with our laid down procedures. Overall, I would say last year we started the March 26th or 27th when everything stopped down. April, May were tough months, so we had to close down our factories for the health and safety purposes. Then we had to adhere to the COVID protocol. We were slowly getting our factories back. Then the customers were not allowing engineers to come in, so that all had to be. We started learning how to manage the factories in such volatile COVID environment, as did our customers. And then there was a pickup of the market. Steel was doing well, though the commercial heavy truck did not do so well. But for example, wind was doing pretty well. Industrial distribution was doing well because the steel output was getting up, was getting better and better. And then there was certainly a global offtake last year, October, November, globally markets were doing pretty well. And then this year, by the time the COVID second wave started hitting, January looked very normal, but March, April, then the COVID second wave started coming again. It had a effect on us, and as we speak now, it looks like that the worst is over. Indians are vaccinated. We see a lot of people now behaving very responsibly by wearing masks and keeping the social distancing norms in place. Our factories are running a full blast, and we have learned how to run our factories in this COVID environment. Our raw material supplies are pretty much good. Most of our customers are running very well, and if the regression analysis of last 16 months, we can safely say that the worst is over, though COVID is not over, but we have learned how to live in this COVID environment, how to produce and sell our product in this COVID environment. And we have also made sure that all our employees are vaccinated, they are safely doing their jobs, and we are promoting the cause as citizens of India to get everybody vaccinated around us. And we are also helping the cause through our social responsibilities, whether through the company or otherwise. With that, I would also say that the notice for 34th AGM and annual report FY 2020-21 was sent by email to all the shareholders as permitted by the Ministry of Corporate Affairs. Also, same are put on our website of the company. I take the notice dated 18 June 2021, convening the meeting, the explanatory statement, and the board's report as read with your consent. Statutory auditor's report and sectoral audit report do not contain any qualification or any adverse remark. Therefore, with your consent, I take them as read as well. Also, in this notice of 34 AGM, some of the business items, resolutions are covered which are open for voting. To receive, consider and adopt the audited financial statement for the year ended 31st March 2021 and the report of the board of directors and auditor statutory auditor's report. To declare a dividend of rupees 1 rupee 50 paisa per equity share of rupees 10, each fully paid up for the year ending 31st March 2021. Also, to appoint a director in place of Mr. Doug Smith, who retires by rotation and being eligible, offers himself for reappointment. Reappointment of Mrs. N.S. Rama as an independent director of the company. Ratification remuneration payable to the cost auditors of the company. These are the resolutions which we had to take up. Other than that, I am open to questions, and I would ask Mr. Tarun Beniwal to moderate this session, as we have received some of the questions, and I would ask Tarun to moderate and take up questions, please.
Right. Thank you, Mr. Chairman. I am Tarun Beniwal, moderator for this session. I am present from Bangalore location. Before we move to the Q&A session, I would request all speaker shareholders to adhere to the following norms. I will call the pre-registered speakers to come up one by one. Speaker shareholders are requested to unmute their microphone before speaking and also enable their webcam if they wish to appear on the video. Speaker shareholders are requested to mention their name, folio number, and location. Speaker shareholders are requested to restrict their questions to 2 minutes so that all speakers may get opportunity to share their views. Now, first, I would like to call Mr. Shyam Sundar from Sundaram Small Cap Fund.
Hi, sir. Hi, sir. Good afternoon. Hope I'm audible, sir.
You are audible and visible both.
Thank you. Thank you, sir. This is Shyam from Sundaram Mutual. Thanks for giving me this opportunity, sir. Firstly, Timken has historically performed extremely well in very challenging times. I would like to congratulate you and for this strong performance, despite all the challenges we faced during this year per se. So my first question, let me start with the basic. If you can provide the revenue mix between segments for the fiscal year FY21 and for the first quarter FY22, that would be helpful. The other point I wanted to check with you, sir, on the export front, we do understand that the second half, particularly that similar to what you mentioned, the global offtake picked up very well. While the full year exports were still down, say 12%, because of the first quarter being weak per se, which geographies are driving this export momentum? And between railways and commercial vehicles, how is the mix in the exports looking like, maybe in the fourth quarter or the first quarter of F22, whichever way you would like to share, sir. And added to that, we wanted to increase exports to 50% of the mix per se as an aspirational target. What can lead to this improvement in exports therein? Is there any China plus one strategy sort of rethinking from our parent Timken per se in terms of the sourcing of goods therein? So that is a related question to exports. So the other point on this Bharuch facility, at the time of acquisition, maybe around the 185 or 190 odd crores of revenue, we had thought the revenues could maybe double in, say, 2 to 3 years. Where are we in that journey, sir? We had also started the Timken Circle R exports from Bharuch per se. What more needs to happen for Bharuch to reach its full potential? That is the other question. On the railway side, sir, specifically on the DFC side, our competition SKF India recently commented about winning an order for the Class K bearings for DFC wagons. Now, Timken has always been a leader when it comes to the railway bearing side. Have we won any order tenders for the DFC wagons? What could be the size of this Class K market eventually over a period of, say, 3 years? I understand today the market is not developed yet, but as you see the market, how will it evolve over a period of 3 years compared to the current Class E market therein? So that is the other question. Sir, on the product portfolio, even in our annual report, we have spoken about leveraging parents' capabilities and providing complete offering on the mechanical drivetrain, belts, industrial chains, couplings, etc. Now, we also spoke about the lubricants as one area. So where Timken India will enter, if you can explain a little bit more on the adjacent products that we would like to enter over a period of 2 to 3 years. So just one or two housekeeping questions, sir. Traded goods per se in F21 has increased to 402 crores, close to 51% of raw material in F21. Now this is actually a year-on-year increase of 8%. What explains this increase in the traded goods per se? If you can also link it along with our localization plans per se, when we talk about the traded goods, that will be helpful. On the royalty side, we have seen an increase in the absolute royalty amount to close to 29.9 crores. This is same, which is very close to FY19 royalty, despite revenue being 15% lower than that. Any change in the royalty terms per se with our parent? Thank you very much, sir. These are my questions.
Thank you, Mr. Shyam Sundar. First the FY 2021 mix heavy truck axle together were 12%. Off highway was 13. Railway was 21. The distribution was 21%, and rest was all what we call as power, transmission, heavy industry, and wind together. So that is the broadly the breakup, and export is 25%. So, and then you asked that what is the first quarter FY 21-22. So there the heavy truck is down 9, while it was 12 last year. Is down to 9, 3%, 3% or 300 basis point down. And off highway is same 13, and rail is still same 21%, and the automotive is down retail market because of the fact that most of the retail shops are not opening. Many states are not allowing them to open, so there is that little bit down there. The industrial distribution, which was 15% last year, is at 14%. Exports are up instead of 25% last year of the pie, they are at 27 point some percentage. So that is roughly the mix of the segment-wise breakup. As far as Class K is concerned, Class K, which goes into the dedicated freight corridor and is also part of the heavy haul for the Indian Railways, we remain the leaders, and obviously the competition cannot be wished away. Competition will be always there, whether it is coming in the form of company A or company B. Our core strength lies in producing world-class bearings, and we have created world-class supply chain in India, which will make sure that we can fight on cost, quality, and delivery in the dedicated freight corridor. There is no tender on the DFC, which a wagon builder puts out, goes without Timken. So there will be obviously SOB, which might go to, you mentioned the name of the company. So some order might go as part of the SOB can go to them, and is certainly you can see that. But we remain leaders in that area. So not only dedicated freight corridor, now slowly the passenger traffic is picking up. Government of India, Prime Minister Mr. Modi has announced more Vande Mataram trains for the 75th year, a train a week. So Timken India Limited out of Jamshedpur has the depth and the capacity to produce those high-speed bearings for the railway, and then the freight as it picks up is also very helpful for the cause of the business. You also asked about the export. In export, it is more the heavy truck bearings, which are both going into the differential and the pinion application of the heavy commercial vehicles, which is what the market was driving rather than the rail. There is a rail export, of course, but it was last year more tilted towards the heavy commercial vehicle. So that the market remains still hot, though it has cooled a little bit as compared to say what was there 4, 5, 6 months back. But the heavy truck market still remains, export market remains hot, and it has been across the geographies. America was more better than say Europe, and we were even exporting to China. So the export market across the geographies was pretty much okay. Indian heavy truck remained down, but at the same time, you must have seen that the steel was going flat out. So consumption of bearings in the steel industry was pretty robust. Lot of bearings going into the MRO of cement, and also the energy was the cause of us importing more bearings, as we still we don't make the large size bearing, and in the bearing industry you cannot make all the part numbers in one country, so they are always spread out. The outlook for the railways remains slow and steady. This market will grow, but not at the pace at other market grows. So it is pretty much slow, steady, going up, and we are well entrenched. Whether it is the freight on the simple tracks or it is the DFC. Though, as you know, that DFC still is not producing to the volumes the wagons as desired, but they are getting better with every passing quarter, I should say. And the passenger, though there was a dip as because of Corona, the coach factories were more or less closed, but they are all open and coming up. Metros are getting again back into the traction. So the railway segment in India is going to remain slow, steady, growing over a period of next 5, 10, 15 years, as India needs still, as I have been always saying, that passenger and freight cannot be on the same track for a modern country. So one day you will have freight on the dedicated freight corridors crisscrossing the country, and passenger going to high speed, which is at least 200 kilometers and cannot be on the same line as freight. So that is pretty much growing. Heavy truck, we all know that the tipper market is looking okay, but still we have not seen the heavy commercial vehicles tracking that much. Very much hopeful that the coming festival season will give it a boost. Tractor market was pretty much okay last year and remains okay. Obviously, with monsoons, there is always that cycle dip in there. Wind has been pretty much robust in India, so which is not consuming for India, which is actually exporting out of India. Big companies like ZF, Siemens are making gearboxes in India and exporting. So we see that. And you spoke about China Plus One policy. India has the potential to become a global supplier in engineering goods in manufacturing space. India being a $2 trillion economy, and we want to go to a $5 trillion economy. The manufacturing, if it is 12-15% of that GDP, and if the pie becomes 5 trillion and our manufacturing becomes 25% of the total GDP, so you can see that sky is the limit for any manufacturing company in India. A lot of global companies are looking towards India to rise up to the occasion. Obviously, it is not only pure manufacturing. These are the labor laws, the tax laws, all that put together will make country more better on exports, and we are getting better on exports. For sure, Timken India Limited is exporting and has been exporting consistently. As you see, our pie has been growing over the years, and if you see dollar terms or rupee terms, we've been growing on our total pie for exports, and that strategy remains there. As far as Bharuch is concerned, Bharuch was, as we took over the Bharuch factory, it was purely a heavy truck dependent company, and heavy truck has not been good for India. So we are in the process, and we have done a lot of work and still doing a lot of work to converting those traditional Bharuch lines to Timken Circle R lines. And the good news is that many lines have got converted. We have started supplying bearings to exports in that. As you know that all the big companies come and they want to do physical audits, they want to do EPAPs, and because of COVID, it has been a slow process because of the fact that people cannot come physically. So they had to rely on virtual audits, which are time consuming and have taken extraordinarily long time. But the process is in place. The exports have started going up. I'm happy to say that we have started exporting out of the Bharuch facility to different locations in Europe, and that traction and demand is getting slowly pushed into the plant as we get more and more approvals from our customers. And travel has been a big deterrent there, especially the SQD people of these big companies. They want to come and physically check every aspect before qualifying these lines. As far as I will ask Vishant to comment on the royalty aspect of it.
Yeah, royalty, there's been a change in the percentage since October. So it has gone up by 1% up. And this is in line with the global thing. We are still in the process of global royalty audit, and we are looking at it. But we are within the law of India as well as within the Timken guidelines. Thank you.
Okay, Tarun.
Yeah, thank you, Mr. Chairman. Next, I would like to invite Mr. Ramit Kumar Banerjee to ask his question.
Hello.
Yes, please.
Hello. Hello, may I audible, sir?
Bolun, sir, bolun.
Good afternoon to everyone.
Good afternoon, Amita.
1 minute, sir. Why not is coming the picture? I'm sorry. Anyhow.
We can hear you, but we cannot see you.
Okay.
Now we can see
good
you.
Afternoon to, yes, sir. Thank you. Good afternoon to everyone. Respected chairman of the meeting, other board members present, myself, Amit Kumar Banerjee from the city of Kolkata. Thank you for getting me connected, an opportunity to speak such a beautiful occasions today, video conferencing meeting. It is our 34th annual general meeting of the company. That I am a long-standing shareholders. Anyhow, basically our companies at present manufacturing, sell and export for anti-friction bearings, components and related parts. Performance is concerned during the year under review as visible in the balance sheet. Total revenue achieved during this year about 1,430 crores of rupees. Profit after tax stood 143 crores. EPS also 19.03. The performance is in comparison with the last year, it is lower. Total debt also increased about 27 from about 327 from 200 crores. Though of course, company's performance now turn on good growth, net sales are up at about 467.85 crores in June quarter 21, about 191% up year to year, vice versa. That I would request consider interim dividend. The market price of the share about 1528. Today's price, the dividend is only 1.50. Consider also bonus. Also think about interim dividend. Promoters holding about 67.8%. It is good. And not only, mutual fund have increased their holding about 9.58% to 10% in June 21st quarter. Sir, what is the future plan, roadmap for the sustainable growth of the profit of the company? Kindly share your capital expenditure plan for next 2 years at least. Any steps to tie up with any other company about any joint venture program? I hope under your leadership with your management team, our company will maintain transparency at all levels, overcome certain risks. Working together will add more value with better result year ahead. Keeping in mind shareholders, minority shareholders rewarding policy. I thank all team members for arranging such a beautiful occasion for smooth conducting AGM of the company through video conferencing today. Thank you. Myself, Amit Kumar Banerjee. Over to you, sir. Thank you, sir.
Thank you, Amita. Thank you very much for your kind question. First of all, as I will take what is more important to all our directors and myself is what you said about transparency. As you know, the genesis of this company, which is today known as Timken India Limited, was born as Tata Timken. What Tata is to India, Timken is to America. So you can understand that two companies which have shown the path of ethics and integrity in the world had come together to do business. So you can be assured that this company will always remain ethical because it is in the DNA of this company. Whether it is me or people after me or people who were before me, they have always led this company and worked with this company with a lot of core values, ethics and integrity being one of them, quality being another of them. Because you also asked a connected question that how do you sustain this profitability? Timken in India and Timken globally, through which obviously we had an earlier question on royalty. This royalty is paid for the technology, and that technology is flowing to Timken India very effortlessly. And in this game of today, where power transmission is evolving so much fast, technology plays a very, very important role. As you see today, that very soon you will have electrical scooters into the roads of Calcutta, and then you'll see electrical cars, and then you see the metro already there, and same you see all over India. So that is technology coming in. So the good old Ambassador car, which was made by Hindustan Motor, just look at that car and look at the car of the future. The car of the future will have no engine. So it will be engine-less car. Just imagine when the car is engine-less. The technology has gone from one extreme to another extreme, and that is where companies like Timken will always have a future. Timken globally has been more than 100-year-old company. Timken in India, this is already our 34th AGM, and I am sure that someday there will be 100th AGM as well. I might not be around, but whoever will be there will also speak about the 100 years and 100 AGMs of Timken India Limited. And companies will sustain only because of the technology, and those companies who will not live up to the technology will obviously become extinct. So that is one part of it. The second part of it, sir, your company has been investing relentlessly into the capex, whether it is extending our current manufacturing footprints inside our Jamshedpur campus, where we are producing a lot of components which initially we were importing into India, and then also the Bharuch facility which we have taken over, which would give speed to the market, and then we are modernizing that plant and making it efficient for future, whichever technology comes into heavy truck or comes into the railways. Timken India Limited will always have the products ready for that. So we will keep on making sure that we are ahead of the curve on technology. We make bearings with top quality. We make them with ethics and integrity. We want to make sure that every shareholder, and whether it is minority shareholder or otherwise, is always kept as an important stakeholders, as are the employees and other stakeholders of the company. So they all benefit from the growth of Timken India Limited. You yourself mentioned that the stock price is 1,500 rupees plus in India, which is you can see it's a healthy P/E. It is a healthy return. And on the interim dividend, we'll take your suggestion and place it in front of the board. But we want to make sure that we don't borrow too much, and we keep on investing into the capex. The trend of the capex will remain same, healthy, or better. We want to make more and more part numbers in India, which is different kinds of bearing. We want to make sure that the investment has the ROI, the necessary ROI. We don't want to borrow money and then default on anything. We want to make sure our investments are safe and our return to our shareholders are always in line with our core competence. We want to make sure that the growth is robust, and you have seen that in last, except Corona, it was unfortunate that last year we got hit with Corona. Otherwise, it would have been a rocking year. As you mentioned yourself, that the first quarter the growth is 191%. We will for sure ride the wave of growth in India, whether it is Indian Railways, whether it is the trucks made by the OEs in India, whether it is the windmills. Timken is always there at the forefront. Our mother plant in Jamshedpur is one of the most modern bearing plants in the world, and the Bharuch facility which we have taken over, we are converting into world-class factory. We make bearings in Jamshedpur which are exported. I'm saying it with a lot of humility and pride that we export to every market globally. And the bearings which we made for railways in our Jamshedpur facility, whether it is the Shatabdis of India or the Vande Matarams of India, or these are the high speed running in the Europe, or these are the heavy haul freight in America. We make them in East India, very close to Kolkata, and supply them across the world. And we'll keep on doing that. We have the depth of technology, we have the people in place, we have the infrastructure in place, we have the supply chains in place, and we have continuously the evolving technology with us, which we utilize, whether it is materials, whether it is heat treatment, whether it is dry grinding, or the state of other sciences which we use to make precision machining possible in India. We'll relentlessly do that and bring value to our shareholders. Thank you very much. Tarun?
Yeah, thank you, Mr. Chairman. Next, I would like to call Mr. Ravi Gulati. Okay. It appears as Mr. Gulati is not connected with us. Next, I would like to call Mr. Mahesh Bubna. Okay. Mr. Bubna is also not present. Next, I would like to call Mr. Kamlesh Kotak from Asian Market Securities Private Limited.
Hello. Am I audible, sir?
Yes.
Yeah. Good afternoon to everyone.
We can hear you, but we cannot see you. It is okay. You carry on.
Okay. Yeah. Am I visible?
Now we can see you.
Yeah.
Now we can see you also.
Hello. Hello. Good afternoon, everyone. Sir, I just want to have some more clarity on the points which you already mentioned. One is you already have touched upon exports as a potential. So I want to understand from next 3 to 5 years perspective, now that Bharuch facility also has got approval and has been aligned to the global standard of Timken, what kind of export potential we have in absolute terms over next 3 to 5 years, both from India facilities in Bharuch and Jamshedpur put together? That is one. Second thing, I sir, want to understand that what has been the average capacity utilization at both the plant for last year and now as we speak as of now. That is second. Thirdly, I just want to understand, sir, that how much is the revenue coming from the new product? You emphasize on many investment that happens and the new product that are being rolled out. So how much is the revenue contribution from the new product that we have seen over the last 2-3 years? I also found from your annual report, sir, that the standard products production was up this year, FY21, whereas the special product category was down by 28%. I wanted to understand which pockets of the sectors were showing growth and which sectors were laggard in the year during this kind of divergent manufacturing trend that we see. I also wanted to understand, sir, our margin profile. We had touched an all-time high margin of 22%. Now I understand because of the commodity price pressure, the margins have come off to 16-17%. So what is the long-term sustainable margin for our company that we can look forward to over the next 3 to 5 years time zone? And lastly, I sir again want to have, do you have any absolute number in terms of the capex plan for the current year, at least if you can share with us? And also, I think I missed out in the opening reply you said about the revenue breakup. if you can just, for my sake, repeat once a couple of numbers were not audible to me. So that I think if you can repeat, I will be appreciating it. And last one is a broader question, sir, on the automotive disruption. You said that EV is going to be coming for sure. I want to understand how much of our revenue is coming from two-wheeler and passenger vehicle, and how much disruption you see for the industry and for us because of the shift from the ICE to EV over the long period of time. So if you can just get me that understanding also of revenue contribution from two-wheeler PV and how the EV evolution is going to disrupt our business maybe over a long period of time. Yeah, that's all, sir. Thank you very much.
Thank you, Mr. Kamlesh. So I will first answer the easy question. We don't sell to the two-wheeler market in India. We don't sell to the three-wheeler market in India. Both these markets are ball-bearing markets, and also we do not sell to the car market in India. Maybe high-end SUVs here and there, but our heavy concentration is on agriculture, which is the tractor market, the off-highway, which is backhoes and excavators, and then we also do heavy haul, heavy commercial truck. So we are zero on two-wheelers, zero on three-wheelers, zero on washing machines, zero on refrigerators. We do not sell to these markets, which we term as commodity markets. But our play starts when backhoe loaders, excavators, harvesting machines, heavy tractors, and heavy commercial vehicle. The more the HP, better for us. That is the play we are doing. On the EV side, the first revolution of EV in India would be two-wheelers. They are the first which would get completely slowly and steadily. Obviously, we all know that there are a lot of jobs connected to the current two-wheeler market, whether it is small-scale industries, it is machining, it is two-stroke, it produces a lot of pollution. So this is the first low-hanging fruit if you look at the environmental side of it. But then India is a poor nation, so government of India will take a very cautious call. But it is the two-wheeler market which is the first which is going to be really electrified. As you know that for a passenger car, a slow charge will take 8 to 12 hours of charging. But for a two-wheeler, it is a 2-hour charging. So that is a low-hanging fruit. And a two-wheeler you can charge at home. For fast charge, for a four-wheeler, it needs at least a docking station, which costs in India 4 or 5 lakh rupees. So people may not be able to afford it, and then you might not have that infrastructure. So why I'm speaking about it, the first market on EV, which will get really impacted, would be the two-wheeler, three-wheeler, and the small car segment. On the heavy truck, one day certainly there will be fossil fuels going away, but I think that is a long, long way away. As I just mentioned, that to charge a car on a slow charge, it takes 8 to 12 hours. For a 50 HP vehicle, it will take ages to charge. Obviously, the battery technology is getting changed, and hydrogen is coming into picture, and all that is happening. So as far as Timken India Limited is concerned, and Timken globally also, which is one of the stakeholders in this company, two-wheelers is not a play, and we have never supplied to any two-wheeler market or three-wheeler market in India. Passenger cars also, we do not concentrate on this market. Only when there is a high-end SUV and they need, say for example, Mahindra launched their Scorpio. They wanted the front-end wheel bearing, which we indigenized to India. And they started U497 was the part number I remember we made in Jamshedpur, and that was used by Scorpio. They still use it for their export models still today. So for your sake, the heavy truck was 12% of the pie. Off-highway, which is comprising of the tractor, excavators, backhoe, was 13%. The rail was 21%. Industrial distribution and auto distribution was 21%, and then we had 25% was our export. The rest was what we call as the HVI, which was heavy industries, stationary equipment. That was the rest of the stuff. And if you compare it to the first quarter of this year, it is almost similar. Only exports have gone up. Export is now 25. It is 27 point some percentage. And the commercial heavy trucks are down, It was last year 12, it is down to 9. So we have lost 3% there because the heavy trucks are not being currently made. On the current export outlook, as you see that almost 25% last year was 350 odd crores was export. We are looking relentlessly to use our Bharuch facility to export more. It is a play which is for the heavy trucks, and this current exports can only grow. We are looking at a healthy CAGR of double-digit growth there, and that is which we are aiming. We are aiming for a profitable growth, and export speed to the export market out of Bharuch is our important focus area. So we have started doing that, and this 350 crore rupees can grow at a healthy CAGR year after year at that place. And then the capex which we have used, for example, we expanded Jamshedpur. It was more of producing components which we are buying from other sister units outside India. It was import substitution, so it goes into the bearings. As you know that this year compared to, if you say from January of this year to up to now, 20 to 30% steel prices have been increased in India. As you know that the Indian OEs are slow to pass on that commodity price increase to us. So that is why you saw a ding there, and then you will see that getting because we are committed to pass on the steel price increase to the customers because this is not a 1 or 2 or 3% commodity increase. It is 20 to 30%. So we will have to pass it on to the OEs, and they will have to decide how they like to recover that. But we are in the process of recovery, and we are getting successes. But then we get success, and then there is another price increase coming in. So steel prices have been abnormally high, and obviously this game of getting that back from our OEs is a slow, painful process in India. It is unlike in Europe or in America where this is automatically connected to an exchange and you get the price changes on commodities very next day. So in India, it is still a game of negotiation and game of discussions, and that is on. And we have received first wave of increases from all our OEs, and we are working on the second wave. And these steel prices hopefully come down next year and soften and make it easy for everybody. But till that time, we are in the process of recovering this. So commodity pricing is what will get the EBIT back to the company, and we are committed to that profitable growth to get that EBIT back to the company. And then you said that special item, which is what we call as a double extended cone. This is currently which is last year and currently being exported to America. It goes into pillow blocks, which is an industrial application. That market in America is not as buoyant, say, as the heavy truck market is there. So Jamshedpur TS, which is the bearing which goes into the heavy truck off-highway, our capacity utilization has been 100% last year, and it is 100%, except the months and the days when, because of COVID, we could not run it. Rail has been 70%. The special item, which we have also mentioned in our annual report, is 50%, 55% utilization. And Bharuch plant, which was producing traditional ABC and is connected to the heavy truck market, utilization last has been only 55%. So we got open capacities there. That is the reason we are converting those lines into a circle R so that we can export. And we got enough orders to fill in that plant. So it is the PPAP, the inspection, the visits from the Germans and Americans to that plant. Those are the end customers, and then the exports will start. Otherwise, we are very much into the process. We have put in modern furnaces there, modern measurement rooms in there, and other related activities with which we can make world-class bearing. Standard bearing 100% utilization, and generally 100% is too much in the sense that you need to do preventive maintenance, things like that. And we are walking the extra mile on that on our sub days and things like that, but it is completely producing. And the components for which we did expansion in Jamshedpur is also producing, whichever lines is commissioned, they are all producing 100%, and we want to produce more and more there. And Bharuch, we have a lot of a lot of space to produce more. Either the heavy truck market of India bounces back, and we will produce more ABC till we get all the approvals from the end customer, or the COVID gives us a chance to get these customers to our place and get them quickly qualified. So either way, dependent on international travel and our conversion, fast conversion for exports, and B, if Indian heavy truck market lifts, we can fill up that capacity with the ABC brand.
Right. Thank you, Mr. Chairman. All the registered speaker shareholders have asked their questions now, and with that, we have finished the Q&A session. I would request you to proceed with the meeting. Thank you.
Thank you, Tarun. I sincerely thank you all for the participation in this meeting. Thank you very much for the participation and some very good questions. And then, upon receipt of the report from the supervisor, the company secretary who is authorized for this purpose shall declare the voting results and also place the same on the website of the company. The voting results will also be sent to the stock exchange for the necessary action. With that, I now declare the proceedings as closed. Thank you once again for your time, and thank you once again for being patient and listening to our. I thank you all. Thank you very much, and God bless you all.